The broadcast is now starting. All attendees are in listen-only mode.
Hi, Sandy Vicani, Insurance Agency Marketing. I head up the Life Division here at IMS, and I just want to say thank you so much for taking time to attend this webinar with a good friend of ours with Protective. There's a few house cleaning items I want to go over before I turn this over to Dana Brown with Protective. Again, can't say thank you enough for taking time out of your schedule to attend what I think is a really important webinar here. So what we have here at IMS, we try to just say thank you for your business and for your referrals. And so for the referral side of it, we have something called an IMS Business Builder. And what that is when you refer an agent over to us and that agent gets contracted, we send you a check for $50, and that's our way of saying thank you so much for trusting us with that agent or that referral. When that same agent writes and places business with us, you get paid 20 basis points on any piece of placed business from that point on, whether that's life, annuity, MedSup, long-term care, combination thereof. It doesn't come out of your commission. It doesn't come out of their commission. It just comes from IMS as a thank you, again, for entrusting us with that referral. We have for all of our agents something called a marketing reimbursement account. And what that is for every $100,000 of placed premium, we put $100 in that marketing reimbursement account. Kind of think of it as a business savings account. So when you purchase anything for your business, whether it's a website, a newsletter, you did a seminar, it's a computer, whatever the case may be, submit that invoice to us. We pay up to 50% of that invoice as long as that money is in that account. That marketing reimbursement account, that continues to build. It rolls over each year. You never lose it. So if it takes a year or two for you to, submit an invoice, that money always stays there for you. We also have something called a new producer builder. And what that is for any of our new agents in your first 6 months of getting contracted with us, if you place $100,000 of business, you can choose a 2-year producer website, or you can choose a $750 cash bonus. If you like to wait and you think, gosh, I'm going to place $300,000 of business with IMS in my first 6 months, you can choose a $1,500 gift card. You can choose a Social Security program and 3,000-piece mailing, or you can choose to put $2,000 in that marketing reimbursement account that I just spoke about. If you like to hold off and you think, gosh, I'm going to go gangbusters here and place $500,000 of business with IMS in my first 6 months, again, that's life, annuity, MedSup, combination thereof. You can choose a 4,000-piece mailing and seminar coaching with a top producer of ours, Dave Pimper. A 5,000-piece mailing and seminar coaching with another top producer of ours, Matt Gill. Or you can choose my favorite, and I say it every time, it truly is, a Ritz-Carlton Travel Rewards getaway package where you plan your own destination getaway. And again, this is just coming strictly from IMS as a thank you for your business. We also have just strong back office support, trying to help you save time, and how we do that is from the very beginning with setting you up with paperless contracting. We send you out the contracts. You circle whatever carrier or carriers you're interested in, send that information back. We set you up electronically. So anytime in the future, whether it's a month later or a year later, just give us a call. Let us know what carrier you want to get contracted with, and we'll complete that for you. We do case design assistance. We run your life and annuity quotes. We send you out forms. Out of all of this, I think what is really important is that submission to commission. And what I mean by that is when you submit an application to IMS, we scrub that application, make sure nothing's missing. We order any exams and labs that are required that day, give you a call, let you know that we have the app. If we are missing information, let you know what that information is, and then we submit that app the same day to the carrier. We are physically touching that case every 3 days to make sure it stays on track and gets issued and placed out the door as quickly as possible for your client to receive the policy and for you to receive your commission. So if you have seen any of our life and annuity books, our website, our newsletters, these webinars here, those all come from our creative marketing team. They do an outstanding job, whether you're speaking with Jacob, Sean, or Aaron here in our creative team. They can help you with flyers and postcards. If you have a logo design and it needs to be refreshed, we can create that one for you. Different brochures, website. If you don't have a website, we can create and manage that. Any mailed or online newsletters. Social media advertising, that's really big. If you see any of that advertising on Facebook and you'd like to know how you can do that, how you can get your name out and your agency's name out, give our creative team a call and they can assist you with that. Our IAMS website, if you're not registered, you absolutely need to get registered. It is a great tool to have. It is available 24/7, and that website address is www.iamsinc.com. And whenever you give us a call and you say, gosh, I need a term quote or a UL quote, this is exactly where we go. This is also where we go to pull forms. You can look at current industry link and news. If you're interested in who our top 5 MIGA carriers are, you can pull that up on our annuity grid. If you like to look at our webinar schedule or view any of our recorded webinars, you can pull that right from our website. If you're interested in getting a quote on your E&O, we have a link for you there that you can do that. And then, of course, our sales resource library. What a great opportunity to go into there and view short little 5-minute, 3 to 5 minute educational videos, whether it's on buy, sell, or income riders, or an indexed annuity, key man policy. You're able to pull different questionnaires and forms off there. So again, great tool to have. If you're not registered, please, I suggest that you get registered. If you need help with that, I'll be more than happy to assist you. So I'm going to put out a poll question here, and that is on IAMS Wealth Management. So when the DOL ruling came out, we thought it was really important to try to assist our agents in capturing as much revenue as possible from their clients so they don't have to go outside of you. And so what we did is create our IAMS Wealth Management division. And what that does is, it increases your revenue with managed money fees. You're able to improve your client retention because you're able to offer a full range of products and services. And then you strengthen your clients' relationships because you're looked at and viewed differently by your clients. You're viewed as a fiduciary. If anyone thinks that DOL ruling has gone away, it has not. There's still changes that will be happening. By checking yes, you're just asking for some additional information, and we'll make sure to get those questions answered for you. We also have a Life and Annuity Academy. Just such a great opportunity. This Life and Annuity Academy, again, another poll question. Checking yes, you're just wanting information on it. This is industry recognized. The one that we have coming up is March 13th through the 15th. That is a closed session. However, we have another one coming up May 8th through the 10th. It is an all expense paid trip. So we cover your airfare, your lodging, your meals. It's a 2-day training event. And we go over different sales ideas and strategies from top producers. Indexed annuities, we unravel them. When's a great time to use an income rider? We go over different industry threats and trends and how to overcome client objections. Seminar system, what works best for your region, whether it's, coffee and cookies in a library, or whether your region requires a more formal sit-down dinner seminar. Large life case marketing, whether it's single premium life or private financing or that infinite banking. We go over different industry income riders, wealth transfer tools, software tools. Again, we have close to 1,000 agents register. We take between 35 and 40. By checking yes, you're just asking for additional information. And we cover all of your expenses, again, from airfare, lodging, meals. Great opportunity to meet your peers from all over the United States. Kind of find out what they're doing that works. Also get caught up on any current industry threats and trends that will be coming down that will affect you and your business. So again, check yes, we'll get that information sent out to you. So in addition to carriers having great commission and wonderful incentives, we here at IAMS thought it was really important to offer our agents and their guests an incentive as well. And so we have a 2019 Marketing Summit, and that will be just in beautiful Naples, Florida at the Ritz-Carlton. So if any of you experienced the blizzard snowstorm that we just went through, this just sounds like absolute heaven right now. It is, again, August 25th through the 29th in Naples, Florida at the Ritz-Carlton. We have long invitational periods. We want to make sure we get as many agents and their guests there as possible. So this started January 1st of 2018, and it runs all the way through June 30th of 2019. You can get there as long as you are contracted and writing and placing business with IAMS with a combination of $3 million of annuity premium, $1.5 million of Medicare Sup premium, $2.25 million of single premium life, $250,000 of life target premium, or $600,000 of long-term care premium. Again, we try to make this open to as many agents as possible. When we do have agents come, we're very fortunate where they feel like they are, attending a family reunion, meeting the IAMS family, seeing agents from previous years. It's a good opportunity. It's a beautiful trip. If you're interested, the only way to attend, again, is to make sure that you are contracted and writing business with IAMS. So what I'm going to do now is change this over to Dana Brown. So she is our rep over at Protective. Protective does an absolute amazing job with our business, whether you're looking at term or UL or IUL. So Dana's going to go over the great opportunities with Protective. You should have them in your back pocket, absolutely. So Dana, if you can take over, that would be great.
Yes, and Sandy, can you see my screen? Which side can you see, the left or the right? I just want to make sure
I can see
we're on the right side. Okay, how can I get it, to move just to one?
You should be able to click an X on the left-hand side to get rid of your slides. Otherwise, we can see your main screen, which is great.
Okay, all right, hold on one second. I apologize. Let me just see here. Sorry, Sandy, I'm trying to get you where you can see here.
And we can see your main screen, Dana.
That's okay. So you can see all right, I just wanted to make sure you didn't have to see the other side. So today, for those of you who don't know who I am, my name is Dana Brown, and I am the Regional Internal Wholesaler for your territory. I work with IAMS, and I've worked with IAMS for several years. And what we're going to talk about is why selling from the spreadsheet is dangerous, and looking particularly at IUL. So Protective a couple of years ago came out with an index product that focuses on strong guarantees. So today we're going to basically make it real easy for you to go and break down quickly the multiple carriers that you guys often see and realize, okay, is it the best solution for the client? So in our agenda today, we're going to talk about uncovering what the spreadsheet's not telling you, how to rise above the spreadsheet battle, and then most importantly, why you would look at Protective Life, okay? So let's get on to looking beyond the spreadsheet. So often when clients come to us, we're looking at protection and peace of mind foremost. Well, the numbers automatically, when we're looking across the board, we're looking at a spreadsheet a lot, especially when it comes to IULs. But here's the issue with that. The policy could perform based on a given day, that's on the spreadsheet, but it doesn't accurately reflect going forward. So we're going to look at quickly how to go and break that down. The spreadsheet doesn't tell you the expense structure of the product, life event triggers and how they can impact a policy, and or the quality of the provider. So with IULs, the policy expense structures is critical. A lot of times you'll find that carriers will offer a higher crediting rate that looks great. Everybody's like, yes, it's going to credit well, it's going to look good. But often when they offer a higher crediting rate, those higher rates can illustrate higher cash values, but they have higher policy fees and higher loads in those products. So what is that going to mean for your clients? Because they have to pay for it on the back end, they're actually paying for the privilege to have that higher cap rate. So cash value may look good on the spreadsheet, but when you look a little bit deeper, and we'll show that in a few minutes, we can see that policy expenses and charges end up eating away at that growth. Okay, so we agree that spreadsheets show a point-in-time snapshot of how a policy could perform if it provides a consistent return over a period of time. One thing that I've said for several years in my wholesaler that also works your territory, Kurt and Oldie, is one thing that we can guarantee you is that an illustration will never look the same from the time that you go and issue a policy. It's not going to happen. The interest rates change. You know, life happens. So you'll see we know how can we look and see how can we make those plans perform even after the initial illustration, okay? So when life happens, you know, an unexpected medical expense, car accident, house repair, the normal stuff that happens within a family, we know that 34% based on statistics of U.S. households when they have a major event, and we're just talking something not huge, about $1,000 as a major unexpected expense, 39% of all Americans only have enough savings to cover that $1,000 emergency expense. So obviously when life happens, what's the last to go? We know paying life insurance premiums fall off the priority list. We know that. So think about buying a car. There's a lot more to consider than just price. You know, we know when you buy a car, it's not a one-size-fits-all solution. The same goes for insurance. Whether we're talking car or life insurance, though, it's important to believe in the company behind the products. Your client relationships and your business depend on the company and how those products are going to perform, and we'll talk about that in a minute. So how does our solution rise above the spreadsheet battles? So let's talk about our product for a little bit. The highlights to it are, first of all and foremost, the index product is a guaranteed death benefit. Okay, that's the strength of that product that we have. Cash value potential is strong, and we deliver on what is promised. That's how we built all of our products with Protective. Okay, now the other thing I want to pair with that is low policy fees, and you'll see that as we look under the hood of these different carriers that we're looking at, that you can see that the low policy fees of our product design is going to make a difference for you, and decent cash value all the while. So another couple things about the product, and we'll move on, is number one, death benefit protection, lapse protection to age 121. I'll tell you competitively with Protective, if you look from age 90 to really 110, that's our sweet spot with our index product. It's also for some of our other products as well. Very simple design. That's something I want to say. When I'm looking at comparisons across the board with index products, you've got a million indexes out there, right? Or not a million, I'm over exaggerating, but you've got several. Very simple design, Standard & Poor 500 index, well trusted, a good index that a lot of people benchmark and use. So a couple things to that. Point-to-point annual reset and rolling targets with Protective 2-year rolling target, okay? So where are we best suited? So where this fits best is 50s to 65. You can do it on younger people. I run it a lot. Even 40s looks good. But as far as where the strength of the product and where we've priced it really well is the 50s through age 65. They've got a moderate risk temperament, and they're looking for foremost guarantee. You know, that's something that they want more protection, but also the upside of cash value, okay? So that's one thing we'll look at. Okay, so guaranteed coverage, first and foremost, cash value potential. We use this a lot in GUL cases. So, and we'll talk about an example later where you can actually take our GUL premium and throw it into the index product. So the first and foremost, because it is a dual-sided product, strong guarantees, and also an index product, don't shy away from looking at this product for guaranteed UL cases as well. Again, it makes it appealing for more risk-adverse clients. If they wanted to be in the market, they would be obviously in a VUL product. So this is a great option for them. And then obviously growth potential. So the way the protective index choice product works is it's a 5.6 illustrated rate, a 0% floor, and a 3.5 fixed account rate. All right, so we're going to look at a scenario where it's an age 55 male when we're taking $13,734 in annual premium. Okay, so we'll move on to that example. At the 5.6% interest rate, you can see strongly that our cash value is $346,000. And now this is guaranteeing it to age 105, way past life expectancy for $1 million face amount, okay? If we look at the floor, so we looked at the upside at the 5.6, that's how it's crediting. If we go to the floor, it's $184,827, and again, this is based on cash value at year 20 and paying the $13,734 and to age 105, okay? So even at the fixed account of 3.5 interest rate, you still got a compelling story, $272,414, all the while still guaranteeing to 105. So we're going to, in this instance, I want to tell you with this presentation, they kind of made this very generic, partly because we do use this particular presentation in independent marketing organizations. Now this leading carrier, I will tell you on this one, is Symetra. We kind of keep it neutral just for the fact that, and you'll see in leading or slides coming through this, that there'll be 5 other carriers that we'll compare against. If you need to see these, I can always share these with Sandy, who these people are and who we're benchmarking against. But this one happens to be the Symetra Guaranteed UL. Their crediting rate's 2%, ours is 0. You can see right here, you're looking at a GUL carrier, okay, and we're putting our index product. And you're like, well, wait a second. You're only going to 105, they're going to 120. Well, they're specifically designed as a guaranteed UL. You can definitely see the price difference, though. If you look at the cash value in year 20, you're paying for that GUL. So by taking it down a little bit to age 105, you've got about 50 grand more that you can use if life happens. Okay, this one's another one, same deal, thinking outside the GUL product, putting our premium in, that $13,734 in both products at the same face amount of $1 million for age 55. You can see definitely same story. It's got that guarantee. We're taking a little bit of a hit of a guarantee, but you're about doubling the cash value potential for them. And that's just thinking outside the GUL box, taking any GUL product that you have, take that next step, go and put it into our index product and see what you come up with. It's got a compelling story for you. So you'll look at this one right here. You'll say, okay, middle of the road for this particular one. Same situation, standard non-tobacco, premium on this one for $1 million to age 100. We benchmarked against every GUL carrier on this. And there's a mix here. We've got John Hancock, Mutual of Omaha, Lincoln, they're all in there. If you look at ours, you can see we're not the cheapest, but if you go to the next slide, you can see here, if we put the same premium in, and if life happens, say we missed 2 premiums, that's just what the value of this slide is. If you missed 2 premiums on any of these products, and yes, our premium was a little bit more, you'll notice some staggering things. All the way for loss of guarantee, if they missed 2 premiums, one carrier lost the worst, which was 33 years of guarantee, and the least was 9 years of guarantee. Protective only lost 4 years of guarantee, and that's one thing I want to speak to, is the value of our product. When we design it with the intent that the customer is getting the best value out of it. So while our product wasn't the cheapest in this scenario, it helps sustain them when life happened. All right, so now let's go and take a look at across the board, protective index choice against other guaranteed IULs. So this one's $1 million face, 55. We're kind of kept consistent with that. This I'll tell you across the board is a good benchmark for people. And this is a story I kind of stick to over the years. Run them at 5%. When you do that, that allows you to look under the hood and see what the policy expenses are. So we did this with 2 other carriers with Protective. They're, top players in the IUL game, and we had $65,000 more in cash value. And the strength of that is to the expenses. Like I said before, we were a low loaded product. So if you run them at 5% with the top carriers, you'll see here that the annual premium, we were actually the lowest on this one. Cash value is higher, $303,824, and the expenses are about across the board, at least $120,000 difference between the other 2 that we're benchmarking against. So that's that story. Whenever you're trying to go and meet with your clients and you want to go and think big picture of what's the best thing for the client and also gives you the value, you'll see here that the expenses on this product are a lot better than our competitors. So in recap, Protective rise above the spreadsheet battles. We stand the test of life. That's something I want to say, not just for the IUL that we're talking about today. Protective has done a great job of going and stress testing these products to last longer for your clients when life happens. So with our UL products, IUL, we've got flexible premium adjustable life. That's the great thing because you have that flexibility. Our IUL is a great fit for multiple cases. For years we've been, and this is something we can do maybe in a later presentation for you. We've been, for males, females, 50 and above at standard and even into table ratings, a lot of times we'll take the premium from term cases and we'll throw it into the index product. And like I said, it works for older cases mostly because there's more premium to work with, but that speaks to the great fit for multiple cases. We've got lots of different designs you can do with this IUL. So let's talk about lastly why Protective Life. So something that we've done, I've been with Protective almost 10 years, is we went and kind of changed or honed in on our focus of Protective, and we've based everything around trust, values, and stability. We build our products to stand the test of life. We say that all the time, but we also we leverage that. So I just threw a slide up here on our life insurance in force. We have $862 billion in force, 8.3 million in policies and contracts. But most importantly, I want you to pay attention to the claims paid. That's 73,947 of policyholders, 2.5 billion in paid benefits to policyholders. So that speaks a lot to Protective. Another thing is over the last many years, we've had a huge amount of growth. You can see that in here, but one of the ways that we do that is what we call the virtuous cycle. So one thing that Protective has really done over the last 10 years is they're well known for acquisitions. That allows us to not solely depend on organic growth. And because of that, that allows us to remain steadfast in offering consumer-focused products that deliver real value. So just a couple things on that. And then you can see our Protective way is value, integrity, strength, and stability. We've been around for over 100 years. When we make decisions on our products, we think long-term how that's going to impact our policyholders. So that's just something that I'd like to say about Protective. And again, it speaks to no surprises, no disappointments. We want to deliver what we promised from the beginning. So to recap, you know, when you're looking at IUL cases, look beyond the spreadsheet. You know, go over your client policies and expenses and the differences between those products to make sure you're getting the right solution for them. Consider IUL. If there's situations that you come into where you are looking for both guarantees and also the upside of cash value, you know, I challenge you to look at our index product. And then lastly, you know, look at Protective Life. We've been around a long time. We don't take decisions lightly. We like to spend the time on our products. You'll notice one thing Protective does really well, when they have products out on the marketplace, they will go and they don't go for the next greatest thing. They will wait, see what makes sense, and make sure that it makes sense for long term, not just the customers that are on the books, but the new customers coming forward. So that's all I have today. I want to thank you for your time. Sandy, I don't know if you guys do questions or not.
We do. So what I'll do is I'll change over back to us, and we'll do a last poll question while we answer some questions, and that's if you'd like to get contracted with Protective. Again, if you're set up on the paperless contracting system, then we can go ahead, just give us a call or check yes to this, and we'll get you contracted. The questions that we have, let's see, just to let everyone know, this we'll make sure to contact each and every one of you to answer any questions that you have, run any quotes that you may need. Dana, are we able to send this out in a recorded version or not?
This one is compliance approved, everything that I gave you, so I didn't add anything. So,
wonderful. So
yeah.
What I'll do is I'll make sure to send this out in a recorded version to everyone who has registered. So you can review anything that you may need to, you know, go back over at your convenience. Again, great company. We have access to their underwriters. They do a wonderful job. They have competitive products. If you're not contracted with them, you really need to get contracted with them. Would love to run some comparisons. Again, everyone will receive a recorded version of this webinar. Dana, I would just want to say thank you so much for your time. Really greatly appreciate it. And thank you to everyone for taking time out of their Monday morning. I know it's tough, beginning of the week and trying to get everything scheduled. So greatly appreciate it. I hope everyone has a very successful, wonderful, and safe week. Thank you so much. Bye-bye.